Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, August 26th. The major indices ended Tuesday mixed in a choppy session that marked the lowest volume of the year. Corporate news was light, but there was plenty of economic data and movement in commodities. The S&P 500 posted a 0.4% gain, with 7 of the 10 economic sectors in the green, as traders digested a spike in crude prices and several better-than-expected economic releases. Only 856 million shares exchanged hands on the NYSE, however, marking the lowest amount of volume in 2008. Crude prices traded in a volatile manner, falling 2.4% in early trade, and then spiking to a gain of 2.4% on threats of a hurricane disrupting production in the Gulf of Mexico. Crude prices eventually settled with a gain of 1% at $116.26 per barrel, while natural gas prices rallied 5.7%. The energy sector, up 1.8%, provided leadership for the broader market as it benefited from the gains in crude and natural gas prices. Anadarko Petroleum gave the sector an added boost after the company authorized a share repurchase program of up to $5 billion. Financial stocks fell to a 1% loss in afternoon trading on news that the FDIC increased the number of problem institutions to 117 in the second quarter from 90 in the first quarter, with assets at problem institutions increasing to $78 billion from $26 billion. This headline was not as bad as it seemed, though, considering $32 billion of the asset increase was due to IndyMac, which already failed, and 98% of institutions remain well capitalized. As a result, financials recovered from the knee-jerk reaction to the headlines to finish the day with a 0.7% gain. The tech sector was the worst performing area with a 0.4% loss. The tech-heavy NASDAQ composite posted a loss of 0.2% as a result. On the economic front, July new home sales rose 2.4% versus June. New home sales are down 35% from the prior year, though, but have held somewhat steady in recent months. The S&P Case-Shiller 20 City Composite posted a 15.9% year-over-year drop in home prices in June. This marks the largest decline on record, but the acceleration of the decline is moderating, indicating that a bottoming in the housing industry may be taking shape. A separate report from regulator Ofeo showed flat home prices in June compared to May, which topped expectations. Homebuilding stocks fell 2.9% in Tuesday's trading. Consumer confidence, as reported by the Conference Board, rose 9.6% month-over-month in August to 56.9. That topped the median economist estimate of 53. The survey showed increased plans to buy a car, a home, and major appliances within the next 6 months. Briefing.com does not put much weight into confidence surveys compared to hard data. Nonetheless, the reading counters conventional wisdom that the consumer is going into retrenchment mode. Separately, the FOMC released the minutes from its August 5th meeting. The minutes did not tell the market anything it did not already know, and as a result, they had a limited trading impact. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.